What is up, ADG traders? This is Munya and welcome back to my channel. So today is a Tuesday and you know what we do each and every Tuesday. I share with you guys a strategy that you can use. So in the previous Tuesday, I had introduced to you a strategy that you see right here, and I also said that there is going to be a continuation of that strategy. So that's what we're going to get into today, and I'm going to show you guys how to actually make the most out of this strategy. So there's a second part which we didn't use, where we'll be using the MACD. In the first section we use the stochastic, and if you haven't watched that video, please go back to watch that video. It was posted last Tuesday, so exactly 7 days away. And also, if you haven't watched the recent video that I posted on Saturday where I was doing analysis on volatility indices, please do watch that video. I was doing price action analysis on VIX indices, so make sure you watch that video because it's going to teach you how to do price action, which is going to be important in this section of the video. Okay, and if you haven't already, please click the subscribe button and turn on notification bell so that you're notified after I post a video. Don't forget to like this video to support this channel and share with it with your friends. So let's get right into it. I'm not gonna re-explain the setting up of this strategy. You can simply go to the previous video and watch it so that I don't waste time for those that are keeping up. So but I'm just going to show you that nothing has changed. These are the settings that we had in the previous video. Same settings, nothing changed. Okay, nothing changed. So today we're going to learn something new. We're going to learn how to use this strategy, and we're going to learn what divergence trading is in Forex, right? So basically, divergence is when the price of a pair is moving in the opposite direction of a technical indicator. In this case, we're going to be looking at how the price is moving in the opposite direction of a technical indicator like the MACD that we have down here. The MACD is the one with the green bars. Yeah. So we're going. That's basically divergence, and the importance of divergence is when you see a divergence happening, it means there is the trend of that pair is now weakening, and in most cases the trend of that pair or asset is now changing. So basically you need to know divergence because that's basically what it tells you about. So what is divergence? There are so many types of divergence that you can have on a pair. There's what is called the bullish divergence, where price is going down and your technical indicator like the MACD is going up. That's called a bullish divergence. And also we also have the opposite, which is obviously the bearish divergence, where price is going up, but your technical indicator is going down. So basically to be telling you that we're about to get into a sell trade. That's why it's called the bearish divergence. And the bullish divergence, price will be going down, but your technical indicator like the MACD will be going up, referring that price is about to change direction, right? Again, the bullish and the bearish divergence can also be categorized into a strong divergence, a medium divergence, a weak divergence, and then there is what is also called a hidden divergence. Remember, this market is moved by market makers, and they don't want you to obviously notice what is happening, right? They don't want you to obviously notice what is happening. So today we're going to talk about the strong divergence, the bullish and the bearish, the bullish and the bearish divergence. And then in my Telegram group, which you can join with the link down below, you can then find all the other, you can find a chart which illustrates all the other divergence, which includes the medium divergence, the weak divergence, and the hidden divergence, so that you can learn that. But today we'll focus on the strong divergence, which will tell you when to buy and when to sell, right? So how does this work? Let's get a practical example. I have USD chef right here. We are still using our 15-minute time frame. We are still using the previous settings. Let's get right into it. So what am I looking at when I'm looking for a divergence? I'm looking for where price is going the other way, and my technical indicator, in this case the MACD, is going the other way, right? Here is a scenario of a bullish divergence, right? So let's just call this first point A, and then this other point B, right? So as you can see that point A is high up above point B, right, on your main chart. And then if you come to your indicator window, you find that point A for the MACD is lower than point B on your MACD, right? This is a bullish divergence, and what it basically means is you should enter a buy trade at this point. You should enter a buy trade at this point. So one would have entered a buy trade right here. Why? Because there's a divergence. The price is going this way down, but your MACD is going up, showing a weakening trend. So this downtrend is basically weakening. So you should now start to add buy positions. And as usual, the take profit and the stop loss for this strategy haven't changed. If you don't know them, go watch the previous video. I talked about when to take profit and when to stop loss, right? So this is a bullish divergence that we see right here. As you can see, I have my line right here. I have my line right here. And I can see that it's slanted on price, slanted going down, and then on MACD it's going up, right? Let's look at another example, maybe a bearish divergence. Let's look at a bearish divergence. Okay, there's one that I already noticed. Here is a bearish divergence. In this case, we want our price to be going up, but our technical indicator should be going down to create the divergence, right? Remember the definition I talked about when I started the video. So you can find here point A is lower than point B, but when you come to the MACD, point A is actually higher than point B right here. I hope you can see clearly right here. So one would enter a sell trade at this point, and you can see it sold all the way down, right? Remember, your take profit levels and your stop loss levels don't change. Okay, maybe let's look at another pair. Maybe AUD, USD, open chart. So now I'm searching for where a divergence occurred. Let's hope I'll find a spot. So you can actually use this strategy both on your PC and on your smartphone, right? To export. Okay, I also indicated here that there's a divergence that occurred, so I'm just gonna confirm it by creating my lines, which I can see. So I can see that there's a slant, there's a price drop where my point A is higher than my point B. Let me see if I also have the same thing on the MACD, and yes, I have the same thing, and I have the same opposite thing. So I would enter my buy trade at this moment. I would enter my buy trade at this line, because now I have a confirmed divergence, and I would enter into a buy trade. Okay, let's look at another example again, maybe Euro USD this time. Let's hope we find something on Euro USD. Let's hope we get something. Oh, by the way, maybe before I look at Euro USD, I'm just going to show you the results for this strategy because they have been great. They have been great. These are the results that I've been getting from this strategy. So make sure you try it out. You'll see that I'm adding so many positions to it because this is a scalp, guys. We're getting 20 to 30 pips. So you gotta maximize on your entry. You have to maximize on each and every entry that you get because you're getting a few pips. You're getting a few pips from the market. I can't seem to find anything on Euro USD yet, so I'm not gonna force anything. I'm not gonna force any divergency. Maybe let's look at USD CAD or USD or GDP USD. Maybe we can get something. So this is what you would, okay. I looked for it. Clearly there's a divergence here. As small as it might look, but it's a divergence. Remember, the market maker will not clearly illustrate it for you. So can you see price is going the other way, MACD is going the other way. So I would enter a sell trade at this point and look at how much it dropped to this point. This was a hidden one. This was a hidden divergence. You would have watched this video over and over for you to actually understand this and not miss such a divergence. Look at how much it dropped. This is GU, guys. The pip value is like 20. The pip value for GU is like 20 bucks for GU. It's got a very high pip value, so this is a lot of money. Let's look at USD CAD. If we have something, if we don't. So guys, it's a simple concept. Okay, we have a divergence here, not so clear. Can you see that all the divergences which are not so clear, like this one, are the ones that are very much profitable? Can you see? We have one here. Can you see it? Just missed. I missed a pick. Yeah. We have one here. Most of the people will miss this, especially on the price. They will not see that this is a divergence. And also here, it's hidden. Most of the people will miss it. But look at how much it dropped. So you need to be very, very precise, very, very attentive to what is happening in the market. If you get 2 or 3 of these good entries, maximize when you trade. This will be very profitable for you guys. I've shown you the results, and you will see that I would open multiple positions because I would be very sure the divergence, a strong divergence, it does not miss. A hidden divergence does not miss. So I would know. But nevertheless, always use proper risk management. I am not a financial advisor. I am not registered as a financial advisor. That's a disclaimer. Forex trading is risky. Protect your capital. If you want to learn more one-on-one with me, you can contact me on my Instagram. You can go follow me. You can WhatsApp me, and you can send me these results that you're getting from these strategies. Don't forget to like the video, subscribe, share with your friends, make some money. Until next time.